Hi, we're three college students, and we're all three interns here at Dorsey Wright and Associates. We're a financial research firm. And I'll start out just introducing us. Myself, I'm Charlie Shiflett. I'm an intern here at Dorsey Wright, and I'm also a fourth year at the University of Virginia and a history major. And this is Ben.
My name is Ben, and I go to Virginia Tech. I'm an international studies major with a focus in international trade.
I'm Joseph Grimm. I go to Virginia Commonwealth University, majoring in economics and finance, and I'm in my senior year as well.
And as you can see, we're all college students and probably just as broke as every other college students out there. So I think we just wanted to have kind of a roundtable discussion of where we stand as the youth of society. And if you turn on CNBC right now, it's probably telling you that the world's going to end tomorrow and that there's never going to be an end to the economy we're in right now. But I think there's hope, and I think that we can do a lot of things as young people in today's society that will set us up for getting ahead later on in the day when things start to turn around.
It's been an amazing year. I mean, just being in school, you wake up every day, you read the newspaper, you go to class, and people are talking about the market. It's the first time that people are actually worried or interested in what's going on in the world and what's going on in the stock market and how their parents are doing, and even classes, professors are talking about it more so than ever.
I think so. I think so.
It's actually pretty compelling from my experience to take finance classes during this, because a lot of my classes are going into breaking away from just using a textbook to actually going and discussing what's going on out there in the real world. What are the implications of this credit crisis? How does this actually work? And trying to uncover more of that side of it, because we really are living during kind of a historic era.
I couldn't agree more, and I think it couldn't be a better time to learn from our mistakes, and it's a great time for us as the young people to gain perspective of where we stand here as we see this economy deleveraging by the mass, and by deleveraging I mean starting to balance our budgets. The overall, a lot of companies are working with huge deficits, and I think this is a great time for us as college students and young people maybe just outside of college, or even if you're in high school. It's a great time to learn how to balance your budget.
That's right.
You may not have a whole lot of funds to work with, but it's what you need to balance with what you do have to work with.
Yeah, especially, this past summer, gas was, $4 a gallon. The price of food was going up. My beer budget was going up. I just turned 21. How do I balance my budget? How can I pay for gas, pay for food, go out to dinner with my friends, maybe go downtown? How can I balance my budget? What's out there that can help me? And how do I learn?
Yeah. And there's so many, and we're not saying just cut all funds off and don't have any fun. Don't get me wrong, we're all pretty good at having fun. It's just there's a lot of tools out there right now that we can use that are going to help us balance our budgets. Bring a lot of balance in your life as well. We did a project the other day. We were just looking up some of these new sites that have come out. It was during a New York Times article. There's so many sites now that take personal finance into a whole new perspective and allows you to balance your budget online. Two sites that are worth mentioning: Mint.com and Wasabi.com. You can have all your accounts on there. It essentially gives you your net worth, and you can set up your own budget on there. And even furthermore, if you got the iPhone or the iTouch, you can just sit there and do it while you're at the store. You can see what your balance is, and you can balance your budget right there.
And they're great. They're great sites because they're very visual. We're so used to having Facebook and seeing pictures and everything like that, and it breaks it down in easy grasp for you. You can input your data really quickly. You're on the go. They're great.
And I think that's really the key here, is because we're all kind of in a transition point in our life right now, where you've been going through living at home and going through elementary school and middle school and high school, and now you're going off into the real world. And it's time for you to start being a little bit more mature and start actually looking at how you're spending your money. So whether you go through more of a high-tech route like that to try and plot everything out and figure out your net worth, or you just sit down with a pad and paper and start tracking, what am I spending this week? And not changing anything, just trying to get a better grasp of what's going on with your money, because in a few years you're going to be off on your own, and that's something you're going to have to manage.
Yeah, and if you can build good habits now managing your money, the future is there's endless opportunity. The future is yours.
Yeah. And I think that kind of brings us to the next point. Like we're saying, as college students, we're all 3 college students, and by no means do we just have just tons of money to set aside and start investing.
I wish.
But I think it's important here as we learn as college students to balance budget, and we get into this transition period where, okay, now we're getting jobs outside of college. Hopefully, I know it's a tough time. We're all 3 working on the same thing. But once you do get a salary to work with, we've kind of discovered, that if you just put a little bit of money aside, once you start your career, things can really take off, and you're really going to put yourself and set yourself up in for a good position later on down the road. And Ben's got a few numbers that he can mention.
Yeah, I mean, for instance, we're in a bear market right now, and it's kind of not exactly similar to the early 70s, but it's somewhat similar. For instance, if you put $2,000 in 1973, by 1979, it would turn out to be about, you would have invested $14,000, and you would have a total of $19,000. It's cumulative of about 10% gain a year. And we want to do 1973 to 1979, and this is a short term.
This is just an investment in the overall broad market, just in the S&P 500.
Right. And for instance, maybe if you don't have a lot of money, but you just want to put a little bit aside, 1988, if you invested $500 in the broad market, within 20 years you have a 407% gain, which is about $2,000. So you make $2,000 by just putting $500 in, which is a good return. And then also, in 1988, let's say if you put $500 in every year, that's a total of about $10,000 invested, but you have a total value of $20,000. So it's just great.
It just takes a little bit of dedication. I think there's one more set of numbers in there, or there was. I looked, and just in 2003, if you were to invest in, let's see, I think I wrote these down, in the NYC, which is an ETF, and it's an exchange traded fund. That's just the overall New York Stock Exchange. If you were to invest in that, you got a 9.1% return by 2008. So there's a lot of tools out there, and there's a lot of different means of safe investing. And $2,000, we mentioned that as a number. It doesn't even have to be that much. If you can't get that much out of, squeeze that much out of what your budget is, maybe $1,000, and you can still start to see these returns. And it's just a great way for us to get ahead as a youth in society.
Yeah. And so by building upon your habits of, budgeting your money and making sure that you keep track of everything, what we're showing here is that if you start out early, you can have gains and you can increase the value of your portfolio or your bank account. It's key to start early and to invest as much as you can, through a long period of time or even a short period of time.
Well, let's say, all right, you're in college.
Yeah.
Not a lot of money right now. Taking out a lot of loans to pay for school, you don't really have a lot of money to set aside. I think really the key right there is that even if you can't actually start applying it now, even though applying is the best thing, in fact, the best thing you can do for yourself right now to prepare yourself for a life of investing is to open a small account and start trading. Because no matter how much you read or that kind of thing, you're going to learn. Actually, let's switch over to tape 2 real quick.